Hey folks, Dan Frio here, the rate update. What we want to do is I want to just bring you guys up to speed what's going on in the markets. This morning's the CPI number was hot. I mean, hot. And that really caused mortgage rates to spike at the open. And then we have some retrieval from there. But I just want to educate. Basically, the goal of the channel is to educate and inform you guys about stuff. Okay, when I mean stuff, I mean the real estate market. And I'm not the one to tell you to buy or sell or do this or what property to buy. We emphasize, or my emphasis is on the financing piece of the puzzle, where we focus on that. Once you decide to buy or not, then how we can play a part of that role. So what I want to talk about right now is where the markets were at the opening and what happened. And if you hear in the background some cheering, that means mortgage rates are getting reposted here by lenders, and that it's a good news because that means rates are coming down. But here, when we opened the market, or when we opened up this morning, the CPA number came out and the MBS market just crashed right out of the gate. Okay, we were down over about 60 points or so. Since then, we've recovered tremendously. We've recovered about 65 basis points, as you can see. So what this chart is here is, if you're new to the channel, we monitor what's going on with the MBS market, especially the price of that bond, because the yield on this bond is the biggest component of your mortgage rate. So that's why we focus in this area here. So when this price of this bond goes up, you're going to see mortgage rates going down. All these little orange dots through here at the top are lenders repricing. And when I say pricing, I mean, I'm talking about interest rates. So they're going to republish interest rates. Well, is it good or bad? Well, good. You can see here it says better and better and better and better and better and better. What that basically means is that particular lender is dropping their rates. Okay, so this informs me who is and what they're doing behind the scenes. So I might see here that, XYZ Bank just lowered their rates where another company didn't. And that's why we might choose to go to that lender as well. What we do, our biggest benefit to you guys out there, is we monitor this, as I'm doing right here, plus all these lenders on here, all these little orange dots. And if you could see down here at the bottom, down at the bottom right, you're going to see a little green dot down here. You're seeing 32 lenders already came out so far today and lowered their rates. So if you're a consumer and you're trying to track all this, where do you go? Okay, so that's the role we play for you, because you apply with us in one spot, one application, one credit pool. We scan your loan over basically all these lenders throughout the whole country to find you the best rate in town. So this is what we're doing behind the scenes. This is basically what I do all day, every day. So based off of that, let's get over to where mortgage rates are. The Mortgage News Daily has still not posted an updated rate, because I think a lot of things are all over the board. The CPI numbers, if you want to get confused on something, especially when it looks to the headlines, look at the CPI headlines. CPI is a consumer price index. It's a gauge of how much prices are going up in consumer goods. I'll put it that way. If you go through this, and I'll put my glasses on because I want to look at the different variations of headlines, okay? Inflation decelerates slightly from 40-year high. Decelerates slightly. April CPI reports put 75 basis points on the table for the Federal Reserve to raise rates. So that is catastrophic. Then you go over to here, inflation barrels ahead to 8.3. Well, this one said it was decreasing. Well, U.S. inflation slowed last month. Okay, what is it? Is it going up, down, whatever? That's the confusing part of this. That's one of the reasons why I do the video. So let's dig into these numbers just so you kind of get it. Here's the actual report that gets published. This is from a government website. So people can't say, oh, Dan, you're manipulating the numbers. Let's just go through it. You can see right through here. Let's validate the time it was released. We got today, May 11th, 8:30 a.m., 2022 by Consumer Price Index. This is issued by U.S. Bureau of Labor Statistics. Okay, so that's where I'm getting my numbers. We know inflation's hot, but the biggest thing we want to focus in on is where. What is, if there's one or two segments of the economy that's just, going out of control, that's going to push up the inflation rate. Well, I don't know about you, but on my way to work yesterday, I saw gas prices in Illinois top $5 a gallon. Diesel's at $5.50, teetering on $6. Okay, so let's dig in the numbers. This is directly from the government. Okay, so we go down through here, and if you watch my video this morning, you get it. But if you don't, I want to still drill down on this. Let's just go over to this area right through here on the side. This is the area that's the 12-month adjusted from April of 2021 to April of 2022. Where are we seeing the biggest increases? So let's just go through here and let's start from the top and work our way down. All right, we're seeing right here. And if you guys want to ask questions, go ahead and ask questions. I'll do that as soon as I'm done with this, because you probably are sitting here saying, what's going on? Okay, I'd love to be able to quote your rate, but I can't do that all day long on this platform. So if you would, at the end of this, I'll explain to you how you can shoot me an email or at least call in to get, what your rate would be. I'm also doing a video this afternoon explaining adjustable rate mortgages. If you don't like them, you don't want them, you don't want to hear them, don't check out the video. But it is intriguing because I'm going to show you some mainstream media that's coming out now that's saying the demand for adjustable rate mortgages are peaking, and you should at least be educated on that. So let's go through this and let's see the biggest changes. We see right here 80.5. This, whatever this is, I'm not going to even look to the left yet. It's up 80% since last year. You're thinking Bitcoin? No. What is it? Oh, it's fuel. It's oil. Okay, so it's up 80%. All right, what's the next one? We go through here and the next one's 43, 44. Let's lump these two together, energy and gasoline. So we're seeing one big pocket here. We'll go up one more, energy. So basically our energy is just, going to bankrupt this country. I get the green thing. I don't want to get political, but there's a time and a place and there's a way to execute this, and we're not executing it well at all. All right, so now let's go through some other smaller increments, but they're in the 20s. We have right here, utilities, gas services, piped. Again, what's the common denominator? We then look down to the next tier or tranche. We have cars, used cars, and trucks, okay? So you get my point. A lot of stuff is really going out of control, but it's the areas that are really volatile. So let's go through also and let's look at where the trajectory of things are going. So let's look at, for example, let's look at the beginning of this year in each one of these tranches. Let's go to energy, all right? February or January, energy was up 9.9%. February, 7. March, 22. Then we see April, 2. I like it. It's coming down. Okay. So are these numbers showing a peak? I might be thinking yes in some of these areas, especially the major areas. The next area let's look at is the next highest peak right in here. This is energy commodities. We saw in January up 0.9, February up 3.5, March up 11, and then April down 2. What's the trajectory there? Down. We'll go to the next one. Both these areas right here, gasoline and so forth. January was down. February is up 6% across the board. March up 18%. Both of those right here are showing down. So are we peaking? Because some of the areas that are going up, let's go down through here. Transportation services up from 2 to 3. The next piece is, let's go to medical. No. I want to see where food is, food and homes. All right. I don't know about you guys, but I went shopping this weekend and I spent $400 at Costco and I just went there for a few items. But you're seeing here, and you're going to dispute these numbers. This is from the government. So this is what I have to work with. Okay. You're going to see the numbers for example, food at home. January is up 1, February up 1.4. March up 1, April 1, okay, down from 1.5. All right, we're starting to see a lot of these things capping in March. Once I think the people start analyzing this, they're going to say, maybe we'll wait for the next number. But if you just look at the headline news over in this area here, inflation decelerating, and then the other piece is inflation barrels ahead. What is it? So that's what I wanted to at least explain to you guys what's going on there. Let's go back to the MBS market. We're starting to stabilize, but we're up over 60 basis points from where we started. Good. Again, what this chart means is as this is going up, rates are coming down. What the orange dots means basically is that lenders are repricing to the better, meaning dropping their rates. So let's go. I'll answer any questions that you guys have if you do have them. When Fed increases rate, how does it affect mortgage rates? For your FYI, last time February increased by 50 basis points, mortgage rates went down after the announcement. You are accurate. So let me explain what the Federal Reserve does. They control the federal funds rate. It has nothing to do with mortgages, okay, with basically technically. But it's a focal point. It's something that everybody's watching. In today's world, why is it important? Well, because they're trying to get ahead of the curve. They're saying, we need to cool down things. So their whole spectrum is the broad economy, how much prices are just getting out of hand. I'm still saying what happened was, yes, there's supply chain issues, but the biggest thing that we had going, I guess, for us and against us was just think back in January 2020, when basically the world shut down. What happened? Okay. Well, most businesses were shut down. Okay. Mostly all businesses were shut down. You couldn't even go to work. You couldn't even be driving in a lot of situations. Just think back in March of that time. So you couldn't go to work. So thus you couldn't produce anything. Thus what happens is, well, production stops. Okay. But the government came in and said, we got to start subsidizing people. We got to start sending out money, because if they're not working, they're not making money. So they came up with this program where they can pay you no matter what if you're not working. Okay. So that's fine. But there was more pieces of this puzzle that transpired. But that's why I want to try to explain to everybody too, is forbearance came into play. You didn't have to make a mortgage payment, which helped out millions of people. Okay. You didn't have to make a student loan payment. If you're renting, you might not have had to pay your rent. So we had a lot of people that just didn't have the big major expenses that they have. But with PPP and all the other stuff, over 70% of the checks that went out were to people that didn't need it. That's not me, that's government statistics. And there is a ton of fraud in that system, okay? So what happened? I did a report back when that showed in 2021, consumer income or disposable income was the highest ever in history, okay? Because just think about it. If you still had your job but didn't have to make a mortgage payment and student loan payment, what would happen? Okay, so I know I'm talking about the same issues all the time. That's a lot that has to do with this. Now we created this beast. Now we got to let it start to settle. All right, we threw tons of money out there and people weren't working and they were spending a ton of money. Now it's starting to come back down, or needs to come back down. More people are entering the workforce. We see those numbers. Prices are starting to come back down. Gas prices are starting to clobber everybody that we know. So I won't dwell on that, but I just want to be informed what the Federal Reserve does and how they monitor how they affect rates. Hopefully that's a long answer to your question. My wife and I are currently building a home, expected January 23rd. We have an 800 credit score, 20% down. Where do you expect rates to be November of 2022? Great question. I hate to say it, Brandon, but I don't even know what they're going to be tomorrow. With the volatility that we have, the tough thing is in this world today, we have these things and laptops and everything else where news travels instantaneously. Here's my thought though. The world is, I think we've peaked. Okay. I think the gas prices are the thing that's basically breaking the straw that broke the camel's back. People are starting to hurt. Again, I'm in Illinois. Our gas prices are $5 a gallon. Okay. They're usually $2, $2.50. So they're saying that that's going to cost consumers on average about $2,500 extra a year. So think about it. It's $200 a month extra just for gas. Okay. Now you're concerned about what your mortgage payment's going to do, what your rent's going to do, how much food prices are going to go up. So there's an intriguing thing that I want to show you. I just did this and I forgot about it. Look it down through here. I don't know if you can see the headlines, but one of the things that I monitor too, and a lot of people probably don't monitor, and I'm going to explain why I do, is what's the Federal Reserve's mandate? Full employment. I don't know if I'm even in the picture anymore. Full employment, okay, and job stability. All right. So those are the biggest things to keep things in control. Well, let's go over and see why we monitor what we monitor. Well, I watched the CPI, which that's inflation numbers that the Federal Reserve is mandated to watch. But then you got oil here. Why did I pick oil here, and why did I open this up? Well, we got some good news that a lot of mainstream media isn't going to show you, because good news doesn't get clicks. All right, let's go through here. Where were we? What's the biggest culprit of inflation? We go back to this number, and we're going to go to gasoline, all types. It's up. Any fuel is up between 40 and 80%. All right, it's right there in black and white. We go over to the calendar. The crude oil inventories were just posted at 10:30 this morning. What did they come in at? Well, why am I even showing this? Well, I'm going to explain why. They came in at 8.48 million barrels ahead of where they expected. They expected the number to come in at a negative 0.45. So we were basically 8 million barrels ahead. Okay, so what's this caption say down below here? Well, I'll read it to you because you can't see part of that because of this. If the increase in crude inventory is more than expected, which it is way more than expected, it implies a weaker demand and it is bearish for crude prices. So if we start seeing crude prices really dramatically start to drop, well, then what's going to happen? Well, the consumer price index, aka inflation, these numbers here, let's say if these numbers were standard or down through this range, single digit moves, would we have inflation that high? Would we have inflation over 8% if fuel prices weren't up 80%? Things to look at. That's why there is a silver lining if you dig into the details and not just look at the headlines. So if you have any questions, please post them. I'd love to answer those right now. But where do I expect rates to be in 2022? I know, guys, I ramble a lot. I'll honestly say I don't know, but here's my thoughts. We're starting to see some of the cracks in the puzzles, okay? So if we see gas prices start to drop, we're going to see CPI and inflation numbers begin to drop. Soon as you see inflation numbers starting to drop, and if we ever see one good number, you're going to see mortgage rates go down and could be down sizably. You're going to see the stock market completely rebound and spike, but it's all, I've never seen it this focused on a particular number ever in my whole career. But we are completely focused on the CPI number, the inflationary numbers. So that's why I really wanted to dig into this stuff to educate you guys what's going on. So that being said, my expectations are oil prices are going to come down. The Russian-Ukraine situation's it has to come to a halt at some point. It could last 6 months, could last another year or 2 or 3. I don't think it's going to last that long. But with the Federal Reserve doing what they're doing, and it's starting to bring down spending and everything else, you're seeing the stock market plummeting. So a lot of people are fearing. So when the stock markets are screaming high, you got all this other currency stuff, Bitcoins and shit like that going all over the map. Everybody's investing. Now, cryptocurrencies are crashing, stock market's crashing, home prices are stabilizing, mortgage rates are going up. Everybody's like, oh boy. And when it all sets in, I think it's going to take a couple months, might take 3-6 months. Once reality hits everybody in the markets, we're going to say, hey, things aren't out of control. There's some areas of the economy that are really, really, really hot, but they're cooling down. So my expectations are by the end of the year, we have stability. We have rates about in this range. They should be about 5.5%. Based on all the numbers now, but I don't think we're going to see a 6. We might see 6 short term. It's going to really spook the market again. But I'm going to do a video this afternoon that's talking about adjustable rates. And again, if you don't want to watch it, don't watch it. But don't sit there and bash people that do get it, because once you educate yourself on it, it's like term life insurance. Do you have term life insurance? If you do, why? It's a terrible investment. Well, not necessarily. It makes cost at one point of your life cheaper than at another point of your life. So that's what I'm going to talk about. So if you want to watch it, great. If you don't want to watch it, that's your prerogative too. But Brandon, I think rates they're going to increase a little bit here in the next short term, but we're going to start to stabilize. And I see rates between 5 and 5.5 at year end. Unless we hit a recession, in a major recession, then all bets are off. All right, next one is refi value. Charette, please, if you would, email me on that. I would love to answer it, but I can't go through multiple screens getting you rate quotes and everything. I would love to. So if you would please, I'm going to shoot a banner up there. It'll give you my email address. If you would please, I would ask you to email me. Not that one. Hold on. You can email Nico. Let's see where mine is. Mine is right there. So you can email me or Nico. I'll just say there is, holy moly, bear with me a second. It's one of those days. There's me and Nico down at the bottom. So you're more than welcome to email either of us. Send us that scenario. Give us a half hour. But right now, like I said, what we're seeing in the markets here, rates are starting to come down a little bit. So I'll give you a quote today, but if that rate goes down, I'll repost you a quote either at the end of the day or tomorrow. So we'll stay up to date with you and continually give you updates as the time goes on. But I greatly appreciate you posting on here. But if you would please shoot me an email, and I'll be more than happy to answer that question. I'll get back with you ASAP. You can send it to me or Nico. That's fine. Next one is Biden has messed up so bad. Vote Dems out. Team Blanco. It's your prerogative. I'm not bringing this into a political channel, but we just saw where the prices are, and I'll leave it at that. And where the most inflation is coming from. Okay. Why would mortgages go down when the stock market goes up? That doesn't make any sense. Please elaborate. Why would mortgage rates go down? It was just an anomaly. I hate to say normally. So that's a great question. Normally in a market, here's what you have. I'm just going to bare bones this thing. You normally have two investments that you can buy. Let's just bring it down to that. There's a bunch you can buy, but let's just break it down to two major investments that you and I have access to. Unless you're a multi-gazillionaire, you can get hedge funds and all this other stuff, good. But if not, you're buying stocks or bonds, okay? Even if you're buying an ETF or a mutual fund or whatever, it's stocks or something of that sort. Or it could be a bond ETF or whatever. Normally what happens is you're going to go one of which way. If the economy is going really well, you're going to buy stocks because bonds don't fare well in that environment. What happened over the last, especially 2 years, you have the Fed coming in and they were buying mortgage-backed securities by $40 billion a month. Okay, so $40 billion a month they were buying. We didn't really even need any consumers or any other institutions buying, technically, because the Federal Reserve was buying $40 billion a month. Okay, so they're pumping that market to dive down rates, and then also the federal government is pumping out stimulus checks and money and forbearances and everything else to everybody for funds. Again, studies show from the federal government 70% of those checks went to savings of some sort. So people were pushing money into stocks, cryptos, investments, homes, second homes because rates were so cheap, because that's what they did. So now what we're seeing is all the sugar is taken out of the system. What I mean by sugar, the caffeine or whatever you want to say, is taken out of the system. The government's no longer pumping out the stimulus money to consumers. You now have to make your student loan payments and your rent payments and your mortgage payments. Okay, so we got that going against us. And then we have the price at the pump going up and everything else. So that's what's happening. There's a disconnect there. People are feeling right now, they're like, the market's crashing. I don't want to buy stocks. Well, you're not buying bonds in this environment either. So what do? Okay, you can't even get in the cryptos or anything else because they're tanking as well. So there's no good investment right now. And even cash with an inflation rate of 8, your cash is getting, sitting in the bank making 0.0001. So you're actually losing purchasing power of your money. So that's where inflation plays when you hear people say, well, inflation is that ghost of a tax. Well, basically what it is it's saying all prices for everything, okay, prices for everything is going up. In this case, consumer price index, just to say everything you buy is now 8% more expensive than it was last year. Well, you have money today. Well, did your income go up 8%? Did your asset valuations go up 8% or more? If they didn't, you're losing your purchasing power. That's why stock prices are coming back down, because they're saying, okay, with higher rates, higher wages, all this other stuff, even if the company produces the same sales, their cost of money goes up, their cost of labor goes up, their cost of materials go up. So their profit margins are probably going to go down. So because of all this, that's why you're seeing the stock market coming down as well. So that's the disconnect on all this stuff. But we had 2 years of just euphoria. We had free money. We didn't have to make payments to everything. And it was just, basically people were out there. It was like, and that's a bad analogy. I got some analogies, but I can't say it because I don't want to get banned on Twitter or YouTube or whatever. But if somebody's just giving you a $50,000 check a month, you're probably going to go crazy. And then you're not going to think about it until those checks stop. And then you're going to be like, oh boy, I don't need that boat. I don't need 500 cable channels. I don't need the iPhone 15. I don't need that. That's where we're getting right now, where people are starting to realize, oh boy, you're seeing people at the pump starting to freak out saying, something needs done. I'm not going to blame any political party, but something needs done. Not to say, oh, Russia's invasion's causing this. Well, check out the oil reserves and the oil that we intake from every country. You're going to see Russia plays a really small point in how much oil we need is in the United States. So I will leave it at that. Eccentric, you're on a roll, buddy. When reality hits, people stop spending. We'll go down. You were ahead of me because you already had that posted before I even did my post. Guys, post videos. I'd love to talk to you for some time. We've been on here for a half hour. So if you got questions, I'd be more than happy to view them. But again, thanks for the valuable information, Dan. If we enter an official recession, what does that historically affect rates? Historically, over the last, I think it was 6 to 8 recessions that I studied, in every situation, mortgage rates went down between 1 and 1.5%. So that's why I'm saying, guys, I know this little blip in the radar right now, you're thinking mortgage rates are crazy. Well, I ask you this, okay? If $100 or $200 extra on a house payment is going to kill you to buy that house, don't buy it, okay? Don't buy it, because you're not going to be able to afford gas and food and everything else. But what you have to ask yourself is, what's the alternative? Do you rent? So now do a rental comparison. How much is my rent versus if I were to buy the property? I'm not saying it works or it doesn't work. You might be in an area where, heck, my rent's $300, $400, $500 cheaper than I could buy a house for. Then rent. Okay, but do the analysis to figure out for yourself, what's going on. Also, what a lot of people don't understand, once you buy, so let's say you buy in this market and the rate's 6, but you can afford the house payment and it would be equal to what you would rent for. That's the highest that payment is basically going to ever be. Now you're going to have people saying, Dan, well, your taxes are going to go up and your insurance is going to go up. Well, yeah, or they could go down. I've actually had my taxes, believe it, and we're in Illinois, I had my taxes go down 3 years in a row back in about 2015, 13 times frames, where my real estate taxes went down. Why don't you shop for insurance? Down in the description, I have a link for a friend of mine who's a broker. Saved me over $2,000 a year in insurance. So it's $150, $200 a month. Well, I'm now putting it in my gas tank, but it saves me money. So there's a whole bunch of areas that we can focus in on. So when you're applying for a mortgage, we'll help you with the mortgage and we'll scan the whole country to help you find that rate. We might even say, hey, you mind if we, help you get an insurance quote? Let's say your quote's $50, $100 less than you're paying a month from what you got on your own. It helps. So every little bit helps. So if that's it for right now, if you guys have any other questions, please post them. If not, I will be ending this and I'm going to start working on another video explaining the differentials in rates and payments and why an ARM might be an option for you. It's not an option for everybody, but it might be for you. So again, our goal here on the channel is to educate you. It's not FOMO. It's not pumping real estate. It's just to answer any and all the questions that you have. Make sure you're an informed consumer when it comes to real estate, especially the financing piece of the puzzle. So thanks so much for watching. Don't forget, we are on Tuesdays, we have a live event like this that I do. It's scheduled every Tuesday. And then on Thursday evenings, for those that can't do anything during the day, I post basically an open forum on Thursday nights at 7 Central Standard Time, where I do it in my basement and I answer any and all the questions that you have. So I greatly appreciate you guys being here. If you would, give us a thumbs up, because I can see who's giving me a thumbs up. So please, that's all I ask. I'm providing you with all this information. Please just do me a little favor and just do a little click so you give us a thumbs up. If you would, comment down below. Let me know how you like these live events. Can you see me okay? Is there something I can do better on my end to make it more visibly attractive to you? I don't mean attractive, but and the audio's okay. The visuals, I'm working on that. You can see I'm in another office right now because my office is getting worked on. And we'll go from there. So thanks for watching. God bless. I will be quiet now because I got to get back to work. So talk to you soon. If you have any questions or concerns or issues, please give us a call or email me.